Okay. It's well, it's 1 minute before 8:15. It's 1 minute before 8:15, so we'll go ahead and get our coffee together and begin to get started on this market. Got a lot of things to go over with you today. Looks like my volume's a little hot, so I'll turn it down a notch. A lot of things to go over. I've been reviewing the charts and I have some things to share that I think are very interesting. So let's see here. I think we're going to pull this out and we're going to take a look at waiting for people to kind of show up into the room, but we'll go ahead and we're going to look at the futures. This off over here so you can watch to see when people come in. But here we are in the futures, and futures are looking pretty flat, to tell you the truth. So, and it's to be expected because we've had a pretty major run. So, this is not a surprise when you're looking at it. Now, crude had a small, well, it had a pretty good dip yesterday in the major markets, but and overnight it went down to about $91 or $92 a barrel. But now it's actually rebounded. It's rebounded a little bit up to about 94, and you can see we're just slightly up about 1%. Full disclosure, I'm actually long crude. I sold some puts on basically this snapback. Oh, wait a second, wrong thing. I sold some puts when I got a snapback low from one of my indicators, which I was going to show to you here in just a second. When I get it's a strategy that I've used for a while when a stock or something is in a very strong uptrend, and I get a snapback low, then I'll sell puts against that. And so I did that yesterday on right here on this snapback low. This is on the hourly chart. Hourly and 15-minute charts is what I use. And if it breaks that snapback, then I'll wait until it possibly doubles in the premium, and then I'll sell it again. That's just a strategy I've used for the last couple of years, and it's really worked very well. And then there's no thought process behind it because all I have to do is just basically, as soon as I see that snapback low, I'm in. So welcome, welcome, welcome. I do start kind of talking right away because these go live meetings actually they start off they show, and I don't want a lot of silence to begin with. I wanted to show you what I have on the agenda for today. I wanted to talk to you about, I want to start off just really quick. I want to talk about a review yesterday. I want to talk about that 2-minute rule. And then the rule I give to you guys about the pre-market high, pre-market low breakout rule, which basically is if it's above the pre-market high and your price is above the moving averages, do not try to short it. Look for pullbacks into the moving averages and go long. Especially if you can get where the moving averages and the pre-market high, say for example, are actually touching each other. That's a really good spot to actually look for a long. If you've been following that rule over the last couple of days, you've been enjoying a very nice move here with what's been going on lately with the SPY. If we take a look at the SPY and we go into this 15-minute chart over here, and I just want to, and one of the reasons why I'm reviewing this is because I have those numbers automatically marked out right here. See here? And let's take this down now to just a 1 minute. Take it down to a 1 minute chart. We're going to review yesterday just real quick. And the reason why it's important to do this kind of thing, to review, say, the day before, is so that you can be more confident in your trading strategies. Okay, so here was the PPI number that we got. I said, in the 2 minutes, mark out your high and mark out your low. What ended up happening in the market was, so here's where we were right here. The market, hold on, which one is it? It's this one. Okay, here's where we were right here. So then the market opened, and it did not get over top of that. It tried almost to get underneath it, but it recaptured, right? And now we're in the middle of that range. You don't diddle in the middle. We're testing the top, and look at this. On the 1, 2, 3, 4, 5. On the 6th candle, it actually tested it, and it stopped dead in its tracks right on that number. And that's why I'm telling you guys, you got to put that number on there when we have a big number coming out. Then what did we do? We had a battle between the bulls and the bears. The bears said, you know what, that's as far as you go. But the bulls said, oh no, I think it needs to go higher. I'm liking that PPI number. And the next candle you got was a nice hammer candle to go long on with a bottom wick right there. Then what ended up happening? What ended up playing out for the rest of the day? Here's where you're at. You actually went over top of that 20 period. I'm on the 1 minute chart now, right here, guys. Okay. You went over top of this 20 period moving average. You came back into the 20 period moving average, and you continued to carry that 20 period moving average. You had a very strong uptrend right here on the 50 period moving average, continuing to offer you support as well. And so let's just continue to see how that day played out. And what ended up happening yesterday, I believe, is that the shorts are just getting squeezed to death. There is so many shorts, and a lot of these guys, they're the hedge funds that got short on this war with Iran, and they're paying the price. They're paying the price in a big time way. Let's talk about the news that's been hitting overnight in the stock market. So, give me 1 second to pull up this. All right, so the geopolitical news right now is that the second round of talks has been talked about being opened up. The ceasefire actually expires in 7 more days, next Tuesday. So, but the market seems to be pretty happy with the idea of what's going on with that. So you can see that, you know, in the VIX is actually, even though it's up right now, it's just barely up. So the VIX is kind of stabilized. The markets are kind of flattened out right now, but we had a huge day yesterday, as you know. Oil is taking a little bit of a rebound, and then gold and silver, they're just flattened out. We're just basically flat right now. So basically, the talk right now about, okay, we're going to possibly be in a talk, is in a way that's kind of priced in. The catalyst that's going to drive the markets higher, if you're looking for a news catalyst, is like, okay, Iran has agreed that we're not going to enrich uranium, and therefore we can come to an agreement. That ends up happening. Boy, we're going to bust apart at the seams. So today we also have on the docket, you know, you got to remember that today is also you know, an earnings day. We're back into the earnings season. So we're going to take a look at that. On the agenda is Morgan Stanley, and got Morgan Stanley. You got Bank of America. Those are 2 to look at. Especially interested in Bank of America because Bank of America it's really strong in the loans area. So if the loans are weak, you know, for Bank of America and their earnings are kind of weak, that's going to give us some kind of idea about what's going on in regards to the economy. So Bank of America is going to play a part in that. And then also ASML, we got to really pay attention to ASML because that's a AI play and a chips play. Then tomorrow we know that we have these 2 right here, TSM, and then also Netflix. And Netflix has been running. So let's see, Netflix is up right now, 3.16 on the week. So that's the earnings calendar. So just want to make sure we have that on in focus today. So the market's had incredible momentum, and we're going to take a look at that as well. So one of the things I've been telling you guys to watch, well, actually, let's look on the economic calendar. On the economic calendar, this is an important read right here that we need to pay attention to. Crude oil inventories. That's coming. We're not expecting those to be very high, 2.1 million compared to 3.1 0.08 million previously. But if this is actually even lower than that, that actually could be a driver for today. So let's pay attention to that. That's at 10:30 today. So we'll pay attention to that. Mark that out on your calendars today. We do have some numbers coming out right now. We're not really; those aren't necessarily expected to have huge effects, but they can have some effects, especially if they're way out of line. You can see with the 2 stars here. So that's it for the economic calendar for today. And this is what I really wanted to kind of point out, which I did the other day. I pointed this out a couple of days ago, and this is the reason why you're seeing the SPY just go absolutely nuts. This is a weekly view right here. See here. This is the end of the week is 417. The end of next week's 424, right? So on this, we are looking at just this huge amount of puts that are in the system, and we need to drain those puts. And you know what? I always say it's hard to kill the bull, but I'll tell you what. There's nothing more stubborn than a bear. Okay, it's hard to kill a bull, but man, your bears are stubborn. I just had somebody message me the other day. I'm buying a put, in this market. I was like, okay. And so, and trust me, there's still going to be people that are out there. They're buying puts even now as the market is squeezed and ripped people's faces off. If you look at this here, going into next week. We still have a ton of puts that are in the system, but now you can see that calls are actually starting to stack up as well. This is what you want to see if you're looking for the market to come back in. So the calls are stacking up 688. We're right now, the price is actually at 694. So this call here, we're in somewhat of a gamma squeeze. Your next call for next week is at 705. 705. So mark that number down, because I actually do think that's an important number. I'm going to show you why. Let's get into the charts now, okay? So moving into the charts. By the way, you guys know that as I'm going through this, if you have a ticker that you want me to take a look at, good morning to everybody. Good morning, good morning. You have a ticker if you want me to take a look at, let me know in there and I'll try to get to it. I'm really trying to make sure that I go through a lot of stuff with you as fast as possible. That's why I talk so fast. But look at this move, guys. We've talked about it and everybody's seen it. 10 of the last 11 days have been straight up. And this is an index. It looks like a meme stock. This looks like GameStop or something like that, the way it's trading. It is incredibly far removed from the 20-period moving average. We're moving into, definitely moving into overhead resistance. You got to look at this move. It's going to have to come in. It's going to have to either take some time off and take a breather, but here's what I do believe that is going to happen, okay? I'm putting on my Swami hat right now, okay? There's still puts in the system. Bears are stubborn, right? What do we see? It's hard to kill a bull, right? And the bulls are off to the races, but also the bears, they're very stubborn. So bears are stacking up puts right now. The bears are stacking up puts, and liquidity is going to be looking to grab some liquidity. I believe we're going to actually take out a new high. We're going to come into the 700 area, maybe even slightly overspike that. You saw 705 for next week is the call wall. I believe we're going to slightly overtake this high. We're going to take in new highs, not necessarily today, okay? But I think in the next week, you're going to see the market push up to new highs. Today, we're looking for a digestion. And by the way, this is OPEX week. So look for the possibility of a pullback, especially on Thursdays. They seem to be repositioning themselves instead of waiting until Friday. They seem to be repositioning themselves to remove that on Thursday. So just want to make sure that you take a look at that. Removing these price levels, I only left those on there to go over that with you to really emphasize that 2-minute rule. You got a 2-minute rule and you got a pre-market rule. All right, let's dig into the SPY. The SPY is overbought. It's overbought in a big time way. Can the SPY stay overbought? It sure can. Let's take a look at this weekly chart here, guys, because this is actually very informative. And what I want you to do I want you to actually get into trading Thinkorswim and set yourself up some charts. And you don't have to use it as a trading platform, but use it as a charting platform. It's fantastic. Anyhow, whether you're in TradingView or Thinkorswim, I want you to go all the way back to 2008, and I want you to draw in this channel right here, because this channel has been the channel. It's marked, look at this, guys, it's marked every low in the stock market for the last 4 years. It's marked every high in the stock market for the last 4 years. And where are we at right now? We're pushing into the highs. Even the middle here has been incredible. It's marked the rebounds for the highs and the lows in the middle here, right? And what did we see on this V-shaped recovery? We got a snapback right there at the middle. I didn't pay attention to it. I need to pay attention to my own indicators, guys. Snapback on a weekly indicator is a huge, huge thing. You don't get snapbacks very often on weekly indicators. And guess what we're looking at right now? But we're looking at, and by the way, a snapback on a stock that's uptrending like this, and it's a snapback low, that's a strong indicator that that's a possibility that that low is in. A snapback high on a stock that's going like this and going like that holds less strength, okay? It just means there was a buyer in there, but the forward momentum of this stock market is like a freight train, and it could actually run over that. I'm not a buyer or a seller. It can run over that seller. So just need to be aware of that. We take out that snapback high and we're moving higher. As we're looking at this chart right now here on the weekly chart, and I showed this to you yesterday, okay? This weekly chart insinuates we could go all the way up to 710 before we reach that weekly resistance. And if you remember, I'm telling you that what we have to do is we got to take the bears out of the system. Everybody's got to get giddy to going long. When everybody's giddy that, oh, everybody buy, you know, we're out of the troubles now and stuff like that. That's when you better beware. So we are cautiously bullish on this market right now. Cautiously bullish. I am looking for melt-up action at this time. Pullbacks are viable into the moving averages. Unless a narrative changes where all of a sudden something terrible has happened, and we don't hope for that, but we're just people who live our days in the market, and what ends up happening happens. So, you know, if it does have that type of a pullback, then we're going to actually pay attention to it. Okay. Now, let me give you new numbers on the SPY on the hourly and then on the 15-minute chart, and then I want to show you something on a heat map really quick too as well. So I got a lot of stuff to go over with you for you today, okay? So looking at this, your number on the, I'm gonna try something new that I built in. It's called a zoom effect for my streaming. So let's see if this thing works. So here we go. Okay, very good. All right. I'm going to turn that off. So your number right here, you're looking at there, it's 639. 694. 694 is your snapback, okay? And then if you look over here, you're looking at 692.50 to 691. That's a zone area right there. So if it pulls back into that zone area, you should be looking for a buy. Also, I've drawn in this upward trend channel. You can see you can get some spikes over top of this upward trend channel. And right now we're pushing the top of the trend channel. We're also this gray area. This was the trading range that we were in for 3 months. That's significant, okay? Do we actually bounce out of this today? I don't think so. Once again, this is OPEX. Once again, we've had an incredible rip so far. So let me take you out of the zoom. Yes, it's working perfect. I like that zoom thing. So if you guys like the zoom, put it in the chat, zoom. Anyhow, we like this trend range, but I would want to see it get back here to, it would be nice if it happened today or tomorrow, 685 area, 682 area. I think we're looking at some business there. On top of that, you guys do notice that we also got a snapback low right here. And that number is 670.53, okay? So we got a snapback low, and that's towards the bottom of the range. We also have a trading support range right there at 675. So on an intraday basis, you could look at this, but on a larger pullback, if we do see a little bit of a pullback, and this is nothing but a pullback within the trend, right? So let's make sure we keep that in perspective, okay? All right, take you off of Zoom. And the reason why I want to do that is because we want to look at that, okay? And that's what you call an uptrend right there, okay? So we are not bearish anymore. We're bullish on the market, but the market is at the very top of the previous trading range. It's at the top of some trend channels. It's getting near the top of a weekly trend, but we still have a lot of room to run on that weekly trend, okay? Let's go ahead and let's drill this down into the 15-minute chart. Where are we at? Maximize the sell. 15-minute chart, your pre-market high right now. Your pre-market high is 695.41. Your pre-market low is 693.05. Where are we at in that? We're right in the middle. So we're completely in balance, okay? We're going to need to see what happens. There is no opening play. I've been giving you guys opening plays for the last couple of sessions because the market's been out of balance. If the market stays like this, you sit on your hands and wait for a decision to be made, okay? Don't just jump in to be on bullish on this. You're going to get a chance to get in. Don't get FOMO right here. This is where you become somebody else's liquidity, somebody who already bought down at the bottom and they're looking to get out at the top. Don't become somebody else's liquidity, okay? Let's not do that. Wait until you see a breakout. What are we looking for? Okay, once again, maybe it runs up into this, pulls back, then you can go long, okay? Are we looking for shorts? Okay, well, you know what? We are into OPEX. There is a possibility for a short, but only if you retest that pre-market low. You're underneath of the moving averages. You retest the pre-market low. It holds. You get yourself a hammer candle. You get at least a doji, and then a good strong bullish candle after that. Then you're looking good. Not this, not a doji, and then run something into that resistance. See how we did with this resistance? That's actually holding resistance at this time, even though that's a bullish 1 minute. Is that a 1 minute time frame? A 15-minute time frame. Okay. So that's it for the SPY. Let's run into the dashboard charts, okay? Guys, this is something I do for myself all the time. One of the reasons why I put together this live stream is because this is something I'm going to do every single day regardless. But maybe you don't even care about these dashboard reports that I share with you. And when I say dashboard reports, I'm talking about this, right? And so, but I find it incredibly helpful. And if you think it's helpful, you know, put something in the comments, say something like dash or something so that I know that you find it helpful. If you don't find it helpful, I will remove this from the session. So let's go ahead. We're going to use my zoom in tool. We'll zoom into this on the dashboard report. And what do we have going on right now is we have crude is actually leading the way, but it's not leading the way by much. It's only up 2.24%. And we can look, you can see that everything is basically flat. So there is no reading in this. The only reading that we can get out of the dashboard report right now is off of this weekly percentage here that I have. And crude is down significantly. And the reason why I'm long crude is because it only takes one headline for this thing to bust back up. And so I'm long with it with bull puts. I sold puts into this, which gives me a lot of room to play. So silver is down for the week, but it's just flat right now. And then natural gas, that one's down if you trade natural gas. This tells you your price action across these zones, okay? So the price action across the zones, crude is actually not looking very good, but everything else is looking great across the zones except for silver, okay? Silver is not looking too good across the zones. Let's go to the, we're gonna go to the dollar. The dollar is, everything's flat. Everything's flat. The VIX is not flat. The VIX is actually down. We're in the red on the VIX. That's good. That means the market's market is becoming less and less fearful. TLT is down a little bit. That just a little bit. It means maybe there's a slight increase on the interest rates. The dollar just barely up. Really nothing to get right home about. Let's move to the next thing. All right. Whoops. Want to put my columns back on. Nope, that's not it. Let's see here. Yeah, this is it. Okay. Sorry about that. Moving to the next one. The ETF markets, they're green in all the time frames. Really nothing to see here, but the ARK-K, well, ARK-K is up, indicating risk on, right? So that's good there. Let's go to the next one. All right, so XLF is up slightly. Banks are reporting. We'll take a look at that in a second. And your semis are down, okay? So semis are down. For the week, semis are up. For the week, XLK is up. For the week, XLY is up. It's a strong week. The SPY is up 2% for the week, so very good on the week. Looking at this on the extended sectors, we're up 1% on this. And here's what I told you yesterday, guys. I told you this yesterday. I gave you the call. I said, pay attention to software stocks. People are going to start to want to buy the dip. They're going to look for the who's been losing. And so look at this. It's up 6% on the week. We had a huge gain last week on the software stocks. It's time for software to have a bounce. I'm not saying it's time for you to buy and invest in software. Probably the long-term play on software might not be to the upside. But stocks that have actually lost 50% of their value, they're going to bounce eventually. Nothing goes straight down, nothing goes straight up. So let's pay attention to IGV. Later on in this session, hang out, guys. Hang out with me. Later on in this session, we're going to review IGV, all the stocks in the IGV on my lightning round, okay? So what else we got? Okay, people are getting a little bit bullish on XLF. Mara's up. That's a Bitcoin miner play. USO is up slightly. What's down? What's down is silver's down, gold's down, China's down. So there's a little pressure probably being put on the interest rates. What else we got? Mag 7. Mag 7 is mixed, okay? What's up? What's up is software stock, Microsoft. I'm calling it out. Software stock, Microsoft is up. It's up 6% on the week, as you can see. Tesla, another stock that's been getting killed and been a loser. Looking to actually find those stocks that have just been killed lately. It's up 4% on the week. Meta has been killed lately. It's up 5% on the week. So, okay, Google's been doing pretty decent. Let's take a look at this, guys. I want you to see this right now. I'm going to turn off my Zoom, okay? And I want you to see this heat map that I put together for you first on this. So if you look at this heat map, we want to see like who's been actually getting killed for the year. Okay, so Apple's down slightly, but look at Microsoft. Microsoft's down 18%. Look at Oracle. Oracle yesterday had a huge gain and had news that came out about what's going on with Oracle. And here, I'm going to actually put this up. And let's go ahead and delete those circles now. And now I am going to zoom in again. But wait a second here. Move that or remove that. So zoom in. Hold on a second. I got to make sure that you're seeing what I'm seeing, okay? All right. There we go. So now I know you're seeing what I'm seeing. I apologize about that. Okay, so look at Bloom Energy. Oh my God. Look at Bloom Energy. It's up 29%, okay? They sold a contract to Oracle. This thing was in the 160s, 170 range. It ripped up to 218. It's put in a snapback high. You're not going to sell off of that snapback high, but you're going to mark that 220 level. It gets above the 220 level. This is actually a continuation play. Okay, I've added Oracle now to my 20 stock list. It's up 19% on the week. Hit that 140, ripped up on the news. I've had some people asking me about Oracle in the Discord, and you know, it wasn't a play, but now Oracle is actually in play. So keep an eye on this stock. You know, put it on your 1 hour chart. It runs into the moving averages, runs into some support zones. You can actually look at this one possibly for a long. But what is actually happening is, let's take the zoom back off. What's actually happening is that people are looking for, once again, they're looking for the areas that have been oversold, right? So Tesla has been oversold. Oracle's been oversold. Microsoft's been oversold. And not so much Apple, but okay, Apple, you know, it could actually be. NVIDIA with what it used to be. This thing used to run up 100%. It's somewhat as oversold. So it's actually come back, right? If we look here and we change this now to like the last 6 months, you could see that NVIDIA's had some turnaround, but you could see that Microsoft's down 23% in the last 6 months. Palantir is down. CRM's down. This entire sector here that I told you guys about, IGV right here, look at that. It looks terrible in the last 6 months. We look here, we look in the last month, it still looks bad. Look here, we look in the last week, what are we seeing? Oh, so we're starting to see these things kind of turn around, right? We look in the last day, what are you looking at now? We look in the pre-market. Let's just see what's happening in the pre-market right now. In the pre-market, look at this. People are looking to buy in this area. IGV, baby, IGV. So that's what I wanted to point out to you. Let's go down here and let's look at this on the high volume. So your high volume alerts right now is Snap. Wow, Snap is actually, and it's up 7% right now. Let me zoom this in for you. So Snap was up 7%. I'm kind of surprised because NVIDIA actually was leading the way. So it looks like a lot of money is starting to flow into, this is the helpful part of this. You're looking at, like your IWM and your Kathy Wood kind of things, right? You know, your RK things. Those are all up above NVIDIA right now in the pre-market trading. And that's very unusual. And you use NVIDIA as like kind of like what's the king of the kings? It's 2.5 million and Snap's up at 14 million right now. And so it's $6. It's running up. And so, and then there's the rest of the list. So let's go ahead and let's take a look at what's gapped up and what's gapped down. So your gap ups, obviously Snap, Hood's up 8%. Hood's up 14% on the week. Look at the weekly on all of these guys. These weeklies, these are all continuation plays. I'm gonna pause it right here in case you want to take a snapshot. You want to take a screenshot of like what's up. AVGO. I had a mentorship call with somebody a couple days ago. AVGO fired a snapback high. It's over top of that snapback high now, I would assume. So AVGO is one to pay attention to. It's trading for $388 right now. Nike getting some love. Boy, Nike has been crushed. Nike has been crushed. So let's see if that one actually has a room to actually have a little bit of a bounce back. I don't really think your gap downs are really what you want to pay attention to, but there is one gap down here that I want you guys to pay attention to, and that's ASML, because ASML just reported earnings. So that's one that we're going to want to actually pay attention to, because that could have a big effect on the semis. And really, I'm kind of looking at the semis to have a little bit of a pullback. Let's get out of the zoom on that and let's start pulling up some charts. So OCO has been asked for. Dash has been asked for. You guys, you know what? I'm going to tell you what. I'm long Dash because I saw a falling wedge on Dash. But what I want to do right now is I want to do what I call the lightning round 20 right here. And so what are we looking at? These are my typical stocks that I trade. And so you can see them here in my lightning round. And let me see if I can. Okay. I want to make sure that I'm showing you guys this as cleanly as possible. So in the lightning round here, I'm not going to go into the zoom because it could be a little bit worrying, a little bit difficult to actually see. But you can see right here, okay? So Apple sitting right in the middle of this range right now. There's really not too much to do with Apple. So Apple's kind of off the list. AMD, it's pushing up towards the top. Has a little bit of an imbalance right there. I would watch AMD possibly, you could watch AMD to go into the long side, obviously, if it gets above the 255. But honestly, I wouldn't be surprised with it being OPEX that AMD is actually to the low side. How are you going to play that? You want to see it get down below these lows and then do a retest, right? Do a retest and then it's down. That's the play on AMD, right? So that number for you right now, if I'm just doing it on the lightning round here, that number is at 250 area. Amazon's putting in a really nice consolidation right here up towards the highs. It's on the bottom of this bull flag when you look at it, right? So we got a little bit of a bull flag right here in the pre-market, and it's on the bottom of that bull flag. Amazon above that is long. Amazon below that is actually a give back, right? So Amazon is a give back above that, or long above, short below. Boeing has a double range here, doesn't it? It has a range here at 225, but then it has its other range at 221, right? So you're stuck in this range right here. You need to get above 225 to be long. You need to get below 221 to be short. Bloom Energy has a huge range. This is going to be difficult to trade. What goes up quickly comes back quickly as well. If you have the guts for it, you could possibly take this as a short, and this would be a quick scalp short going down to the 208 level. It's trading at 217 right now, but man, this stock is bullish. We're leaving a big gap behind, huge gap behind. I'm not a believer that all gaps got to be filled, but I am a believer that when you see moving averages moving up like this, and these moving averages are probably somewhat stacked, and you got the 50 supporting a very strong move, and then this is really a very nice 200-day moving up right there. You got yourself a snapback low of 149. I don't think it's going to come back to 149 anytime soon, so we don't have to pay attention to that. Coin over here is basically it's got a little bit of a balance range imbalance right now. You also put in a snapback high right here. That snapback high is around 187 on that snapback high, and it's pushing into that snapback high. I actually think that we're going to see a bounce on Bitcoin, because Bitcoin is one of the ones that's been beaten down, right? So now that the market's ripped like this is when everybody goes like, okay, I want to get into the market, but I'm not going to get into everything that's been ripping up. In other words, what they're saying, what people are actually going to be saying is, I'm not going to get into Bloom Energy right now. I'm not going to get into Oracle right now. But what I am going to look to get into, I'm going to look at possibly getting into Microsoft. I'm going to look to possibly get into Coin, because those stocks have been torn apart. I mean, Coin was $300 at one time. It's trading at $186 right now. All right, GDXJ. I use that stock for my trading gold. I like the price point on it. I like the spread on it. So GDXJ is pushing the top right now of a snapback. It's kind of in the middle of a range right now. Need to get above that snapback. Its snapback is 133.32. So it needs to get above that. Google is giving no give back whatsoever. Look at this. Look at these candles. It is giving no give back. It's waited for the 20 period to come up and give it some support. That 20 period is moving into a pivot high. It's moving into a snapback high. This is what you call a pincher move right here. This is what you call a pincher move right here. And what it can end up happening is it can rip up above that. So you're looking for it to come up above and then test that. And if it does that, you could be long Google. Hood. See here, right here? This is the pincher move I'm talking about. Ran into this 20. The 20 gave support. You got this nice candle here. Ran above this snapback high. And now we're looking for it to come back and retest that. And that 20 period come into that. Hood can be a long right there. Hood can definitely be a long. Put Hood on your list as a possible long. If Hood is actually up big time on the week, 22% though. So we have to watch that, because if it actually rips up too much, some people might decide they want to take some profit on it, and you don't want to be on the wrong end of that. Meta's up 5% on the week. It's putting in a bull flag. It's testing the top of the bull flag. You got a pivot high on the bull flag. You got a snapback. You got the 20 period moving average. Meta looks good. Meta is one of those downbeaten stocks that people are going to want to get into. Netflix is reporting earnings tomorrow. Netflix has a bull flag. It has a 20 period supporting of 105 support, snapback high. Same story for Netflix. I didn't go over Microsoft, because Microsoft is the exact same story that I just got done going over with Google. So Microsoft, same story. NVIDIA has NVIDIA's at the top of you know what? I'm having problems getting bullish on NVIDIA. I got to be honest with you. I'm not so sure that they can actually continue to maintain the moat and maintain their 75% margins. So NVIDIA is pushing the top of the 197. You can go long if it actually carries that 197 and holds it. It seems like it's kind of moving back down into this range. It looks like it wants to retest this snapback high right here. It consolidating above the snapback high, so that is bullish. That snapback high, I'll give you the reading on that. It's 195, 194 area. So 195, 194 area. If it picks up support off of that, you could possibly move into a scalp on 197 and above, and a retest on that, and you can go long on that. All right, what are we looking at? We're looking at silver. Silver looks like it actually lost the snapback high. All right, if it continues to stay under that, that's when you're actually looking for a retest. We got a gap below. You might see a gap fill on silver. You also got a pivot low right here. What's that pivot low? I'll give that to you right now. That pivot low is $69. So the pivot low is 69. You got the 50-period moving average around 70. So 69.70 gets you into retesting that gap and right around the top of the gap. You should see a reaction in that area around that $70. That's a whole number area as well. So silver could pull back into the $70 area. You're going to see a reaction. It loses the $70 area. It's going to definitely go down to 69. Wouldn't surprise me to then see it actually fill the gap. Maybe not today, but remember, this is OPEX. OPEX is on Friday, so we're probably going to see something happen with that. Oracle, don't chase Oracle here, guys. Oracle's going to give you a chance to get in. Now's not the time to chase, though. Okay, it ran up like 20% yesterday, so it's up almost 20% for the week. 170 gets above 170. That's actually a great area for you. This yellow line that I have right here and the yellow line on the bottom, those are long-term trading channels. So it's moving up towards that trading channel. That's going to be an area of resistance. So it's very close to an area of resistance right now. All right, we already went over the SPY. The SPY is in a very tight consolidation range. When you look at this, though, it's above that snapback high. Once again, I told you, the bears, they're stubborn. And the bulls, they're equally stubborn. So a bull is hard to kill, and a bear is very stubborn. Tesla. This looks very good on Tesla. I like this price action. It's moving right across this 20-period moving average. It waited for the 20-period to come up and give it some support. It's pushing into that snapback high. The 20-period is pinching it. If that 20-period pinches and we get above this 369, 370 area, it's off to the races for Tesla. Okay, TSM. TSM's pulling back. It's probably pulling back right now on the ASML earnings. I don't know what happened on those earnings, so you might want to pay attention to the news on that. We got a snapback low, though, on this, so you definitely want to pay attention to that. Snapbacks on stocks that are uptrending like this are significant. You also got the 50-period moving average. You got a pivot low there as well. That number for TSM is 379. 379. In that area, you also have a trading range right there. So 379, it pulls back to that. Pay attention to what's happening to see if you need to get long or get short on that. Visa. Visa is one of the stocks that they've had somewhat of a beatdown. They've been actually, it seems to me like it's actually starting to pick up some legs. I'd pay attention to Visa. We do have a little bit of that pincher move on it, but it pulled underneath of that. We're getting a support move now off of the 50 period. This is why it's important when you get those stacked moving averages is very helpful, because instead of just ripping down, it got support off of the 50 period. It got support off of this prior pivot low, and that number for Visa is 309. And then USO, let's go ahead and look at USO. USO got the bounce off of that. As I told you, I'm using my snapback low on hourly and 15 minutes to sell puts against USO, and I did that, and so far that put is looking good, but it's not worrying me one bit. In fact, I would love it if it would take one more leg lower, because I'll double down on that, because oil still is gonna have some problems, even with what's going on. It's gonna take a while for everything to kind of balance back out. But Your snapback low is 118. Your pivot low is 124. It's now consolidating above that 124. It picked up the 20-period moving average. Price action, it's over the 5, the 10, and the 20. It's underneath the 50 and the 200. The slope is slated to turn slightly up on the 5 and the 10. It's neutral on the 20, down on the 50, and neutral on the 200. So that's your information on that. Now here's what you've been waiting for me to show you, and that's the what is going on with the IGV. So I put together IGV in this list for you. This is a list of IGV stocks, and this is what they look like right now on the 1 hour time frame. And when you look at it on the 1 hour time frame, a lot of these stocks have already ripped up on the weeklies. It's up on the weekly. There's Microsoft. Oracle's up on the weekly. CRM's up on the weekly. Adobe's up on the weekly. Intuit's up on the weekly. You know what? Let me go ahead and do the zoom on this. I don't know if this is going to be good for you guys or bad for you guys, but I think it might help. So what do we got? PanW is up on the weekly. Now is up on the weekly. CrowdStrike's up on the weekly. SNPS is up on the weekly. CNDS up on the weekly. ADSK up on the weekly. Barely up on the weekly. FTNT. Maybe that's one to take a look at. All right. Datadog. Datadog is no, oh, I'm sorry. That's not the weekly that I did. Right here, Datadog's up 6% on the weekly. So you got ROP is up on the weekly. EA is barely up on the weekly. Maybe that's one to put on the list for you to take a look at. But I would actually look for these ones that have actually moved, say in the 2 to 5% range. Up on the weekly, weekday up on the weekly, Teams up on the weekly, Hubs up on the weekly. Let's do this. Let's take you back out of that zoom. Go ahead and take a snapshot. If you have a screen capture tool, if you don't have a screen capture tool, let me recommend to you guys the screen capture tool called Snip Paste. I use it all the time. Grab a screenshot. This is your watch list on the IGV. This is something I think is going to play out in a big time way. So every one of these guys, when you're looking at them, they're all pushing into the top right now. CRM is actually in the middle right now of the balance range. CRM might be one that you could actually play long. Microsoft is at the top, but it could actually rip up even higher because these stocks have been killed. Oracle's at the top. I'd be careful with Oracle on a 20%, but there is you know what? It has great news. It's been beaten down 50% for the year. So you could come out, retest, and rip higher on Oracle. I'm not going to say you can't. Adobe's down 50% for the year. And look at this on the pre-market price action. Adobe's, here's your low, 243. Here's your high, 244. Below this, you're not going to do anything with it because it's already way too beaten down. Above this, you can actually go long on this stock. Okay, Intuit's been beaten down severely. It's in the middle of the range. It picks up support here off 364. That might be a nice swing for you. PanW is in the middle of the range. Not too much you can do with that at the beginning. Your price points right now is 165, 158. How are we doing on time? It's 9 o'clock. Okay, guys, that's my lightning round for you. I can't get into the specific numbers on these. I hope that you were able to capture that. I had somebody ask about Dash. So I'm going to do Dash, and then I'm going to have to close down the session because I also got to get prepared for the market. But I'm going to do Dash because I'm actually long Dash, and this is something I would do anyhow. So let's take a look at Dash. And let me show you why I'm long on Dash as well. So this is why I'm long on Dash. I'm long on Dash because it's put in basically this right here. It's put in it's a bullish falling wedge. Okay, bullish falling wedges usually break out to the upside. Okay, that's why it's called a bullish falling wedge. What we're looking at on Dash is you're looking at targets right here of. Let me go ahead and do this. Let me go ahead and zoom this for you. So you're looking at targets right here. 185.89 is a snapback target. That's a great target. You're going to find some resistance in this area about the 169 level. This is a daily chart. So right now in the pre-market, Dash is actually up 2.47% on the open yesterday. This is something that's part of my indicators, and this is not something that shows with Thinkorswim, and you can get my indicators at stockchartistry.com. Anyhow, it actually ran up 2% after the open. It's up 7% on the week. So a very nice week for Dash. Dash is now turning around. It's actually on the daily. It's recovered the 5, the 10, and the 20 period moving averages. Is still down below the 50 and the 200. The slope is starting to turn around on the 5 and the 10. The 20 is going to put some downward pressure. Even though it's above the 20, you can see the slope on this is down. So when you're reading this right here, it says, okay, it wants to go up, but you still have a lot of overhead resistance, right? So we're going to see a little bit of that overhead resistance putting downward pressure into this Dash, right? But Dash also has been ripped, to the downside for so long that, let me take the zoom off, it's ripped to the downside for so long that it's ready to actually bust back up to the upside. I'm looking at this 182 level, the snapback at 185, and then the ultimate, if it gets all the way up at 196, I'll be 100% out of Dash by that time. So that's it for Dash. Here's your pre-market high and low for Dash. And then after that, we're going to have to shut this session down. Your pre-market low for Dash is 162. All right, your pre-market high, mark your pre-market high, mark your pre-market low, 164. Okay, your pivots are 165, 166, and 159.50. Thank you guys so much. Have a great day. Stay green.